I wanted to share with you a really cool hack. It's really simple, and I would probably say that if you adopt this, you will be better than 99.5% of all investors out there by this one. There's actually two little tips. So I learned this from studying all of these legendary traders. For example, Stan Weinstein, who I'll probably talk about a little bit. But I've got GPT up, and I'm going to do a quick educational piece on this, and then I'll jump into a chart so I can show you visually what this thing looks like. But what is a 50 simple moving average? So I'll just do a quick little educational piece. And by the way, you don't really need to get hung up on what it is. There's probably, I don't know, a handful of different types of moving averages. But if you really want to dig in, I'm using this AI GPT as an example, because if I remember right, I think you mentioned you're just digging in, just getting started on these AI tools, but it's really pretty cool. I'm going to focus right here, then I'm going to move on, but the 50-day simple moving average is a technical analysis indicator that calculates the average price of a security over the past 50 trading days or 50 periods. And I'll explain that too. It smooths out the price fluctuations to provide a clearer picture of the overall trend. So that's what it is. Boring, probably doesn't mean much to me either. So we could talk about any asset, but I've just got Bitcoin up here, and I'm going to talk about what this means. This stands for 2 days, the D days. And this is what I was alluding to. There's going to be two things I want to share with you. One is the 50 SMA, but also the time frame itself is very important to this tip I want to give you. And remember, I'm not telling you at all what to buy at all. I'm just telling you from a technical standpoint how to use this as a gauge or a thermometer as to whether or not, when you are interested in buying something, whatever that something is, that's what I want to show you. Okay. First of all, the software I'm using is called TradingView, and it's free. And if you wanted to, you could download this on your mobile or your desktop, and they've got the software for both mobile and desktop are awesome. But you can use any other platform as well. Now, let's find it, and I've got it right here. You see this right here? It says the CC SMA 50. By the way, yeah, there's all kinds of tutorials on how to add indicators to your chart. So that may be for another day. I just want to, again, share with you conceptually what I was referring to. So here's what I'm going to do. I'm going to turn it on. So there it is, this line, and I'm going to share with you in a sec, but there it is. I'm going to turn it off. There it goes. And there it is. Now what I'm going to do is, you can see on this 2D stands for 2 days. I'm going to go to the 3-day time frame. Yeah, just like that. So now let's talk about the use cases for the 50 SMA, specifically on the 3-day time frame. But you notice that it's two colors. There's green and then there's red. This is what I love about this. And do me a favor, it's really this simple. So when price, which are these candles, and by the way, each one of these candles represents 3 days. But point is when price gets above the 50 moving average, it automatically turns green. So it's coded this way. And then when price falls below it, just like right here, the color of the 50 SMA turns red automatically. So the use case is when price is above it, you're in. And when price falls below it, like right here, you are out. And when I say out, 100% out. This 50 SMA, just 10 seconds on this, I've been studying a lot of these, I'll call professional as well as legendary traders. And one in particular is Stan Weinstein. And I would highly encourage you to dig into who he is. He created this 4-stage analysis. And what I love about Stan is he keeps things ridiculously simple. But he, as well as others, this 50-day or 50 period simple moving average is one of the main tools in the tool chest. And I was alluding to, when price gets above it, you hop in. But what they also recommend is when price falls below it, they get all out. They sell 100% of whatever it is that they are into, because the 50 SMA is their last line of defense. They've got other indicators that they look at as well. But for us, let's just keep it super simple. And then the other thing is again, I haven't touched on this, when price falls below it, automatically turns red and you don't even get in, you just stay out. And then the other use case is that you want to identify the trend. How do you know if it's going up or down? And you want to make sure not only is this green, but it's also trending up. So here's a definition of where it's not trending up. See where it's going down, but it's still green. And I could share with you later, if you're interested, on how we can dissect, when price hops above the 50 SMA, but it's still going down. Just let me know. Happy to give you a video on that as well. But yeah, you want to make sure that it's trending up. And here it was a little flat, but then now you can see that it's moving up nicely. Yeah, so it'll help with the direction of the trend. I'm just curious what this looks like if we were to zoom way out. Yeah, so that's really about it. And let me share with you, let's do some, I call these measured moves. Let's say that you bought in way back here on Bitcoin and you were to measure this move and you were to sell right when price fell below it. So in 384 days, you made 492%. And then if we were to buy in here and then sell right here, so in 216 days, you would have made almost a little over 51%. And then conversely, if you were to sell, say like right here, you would have missed in about 403 days, a 62% correction, and you would have not lost a penny. So not all of these moves are this pronounced. So like, for example, you've got this little guy right there, where if you would have sold right there and then bought back in right there, I don't know what this will be, but you would have saved a little bit of money and avoided this. Yeah, you would have missed a 3% correction over 66 days. But what you're really trying to do is avoid these just massive corrections. And as we come into the last half of this decade, it's going to be extremely volatile. I actually think this is going to be the last half of this decade is not going to be the decade for investors. It's going to be the decade for traders. And again, I'd be happy to put together a little, video on that. Anyways, my friend, I think that is about it. Let's just do another measured move. I'll go over here. If we were to sell right here, and then if you were to buy back in down here over 422 days, you would have missed a 56% correction. If you were in, you would have lost over half of your position. And then on Bitcoin, again, if we were to buy back down in here and we were to ride it all the way, which I did, by the way, back in the day, we can see 847 or so days, it moved up north of 3,600%. That, my friend, that is really all I wanted to share with you, this indicator. Again, it's called the 50 Simple Moving Average. And if you actually use TradingView, you want to look up here it is right here. CC stands for color coded, because not every SMA changes colors like this. And this is why I love it so much. And then the last thing I'll say is too, you can set alerts. And there's videos out there. I have those. I can share those with you. But when price actually touches this 50 SMA from either direction, you'll get alert to your mobile phone and you can just take a look at the chart and see if it's time to buy or if it's time to sell. Okay. I hope that was helpful. And it was great meeting you the other day. And if there's anything I can do in the future, happy to help. As mentioned, I'm retired and, I just love paying it forward. And that's a wrap.